Welcome to Fomo Consulting for your daily AMC stock analysis video on Monday, May 3rd. Ladies and gentlemen, today was a great day, an absolute fantastic day, and I'll show you why very shortly. I'll also give you my end of week price prediction, and as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, and subscribe, and certainly comment. It's a newer channel, and I would appreciate the support. Let's get into the video. And as always, I want to thank everyone who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very much from the bottom of my heart. So let's start with a quote. To hell with the rules. If it sounds right, then it is. Eddie Van Halen, late legendary and one of my personal favorites. I believe this is relevant because we are not playing by their rules, we're playing by our own. We are playing by sentiment, we are playing by belief, we are playing by everything that they are not. And I certainly believe AMC will have an eruption of its own very, very soon. So let's look at the broader market. Not a bad day, mixed overall. Dow Jones was up, NASDAQ down, S&P pretty much flat. Tech took a big hit yet again. You can make an argument AMC is connected in that realm, and we certainly felt the effects of that today a bit, but I'll show you more importantly why it was a great day. So let's look at today's chart. The problem is that's not today's chart. This is GameStop. And I watched GameStop throughout the day and then flip back to AMC. Let me show you something that looks really, really interesting. So the charts, side by side, GameStop on the left, AMC on the right, and if you don't believe they're connected, here it is. Tanked at the bell, right? Absolute fell off a cliff, had a little peak, fell off another cliff, and then consolidated through the second half of the trading day. No two stocks are alike, but the overall pattern is ironically similar. I do believe, most importantly, with earnings coming up and the annual meeting tomorrow, they are very aware that if AMC pops, GameStop will pop. So I believe these stocks are being treated very, very similarly this week. So I still believe we own the $10 level, and I'll show you why I do believe today was a great day. I believe tomorrow will show the fruit of what happened today, and I'll show you why very shortly, but I still believe we own the floor at $10. I do believe it was shorted very heavily for a very specific reason. So overall, AMC compared to the broader market, certainly the NASDAQ probably had the worst of the three today. It was pulled down a bit. As you can see, AMC traded pretty similarly to the NASDAQ for whatever reason today, but I thought that was very important to show you. So let's look at a little bit bigger picture here. Leading up to earnings in March, around March 10th, you can see where we had four red candles, broke below the moving average. If you look over to the right, we have done so again, 5 red candle days, broke below the moving average, but I do believe we are very, very bullish. We are still in bullish territory. MACD is still in bullish territory. And if you look at the MACD right around the time of earnings or right before, it actually touched the signal line. And yet again, we are touching the signal line today. So let's take a little closer inspection. So again, MACD still in bullish crossover mode, is touching the signal line, very similar to early March right before earnings. 5 red candles, broke below moving average. I do believe this will correct as we go through the week, but this is a closer inspection, and I'm still very bullish personally, just my opinion. So let's look at the daily chart. I broke the chart in half, so I wanted to show you the morning action up until 1 p.m. Eastern. You can see we fell off the cliff right at the opening bell, had the little run up, then fell off yet another cliff. A very volatile morning, and I believe, and I'll show you why I believe this is very relevant to the rest of the week. Afternoon, basically barcoded, consolidated, everything calmed down, had a little run up, closed pretty much flat for the rest of the day. When in doubt, zoom out, right? we are still on the uptrend, although we've broken down below the moving average. I do believe that will correct as we go through the rest of the week. I am still very, very bullish. So this is from my personal Fidelity account. These are the largest option trades today. There are only 3 puts on this entire chart that were placed today, and most of them are relatively small except for one of 1,000 contracts. Everything else on this is distinctly and heavily bullish. They are all calls. Most are at the $10 to $11 strike area. So I am feeling very bullish based on this information. Let's look at something else. So I do believe between the red lines is our battlefield this week. Certainly, if you look, there are a lot of calls between $10 and $12.50. If you look around the $10 to $9.50 area, that is where the concentration of puts are. Beyond that, there is not much. Overwhelmingly bullish for the week. This is, I think, is extraordinary. So if you look on the left, today we are over a 3-to-1. 3-to-1. Versus Friday, we were less than 2-to-1. That is extraordinary. It is certainly heavily bullish, and you can certainly see where the yellow arrows are, how bullish we actually are. That is an extraordinary change. So let's talk about the catalysts for this week. Obviously today, I'm sure everybody's disappointed we didn't run up, but I believe starting tomorrow morning, it's going to be a completely different show. You got the annual shareholder meeting tomorrow. You have the potential of having the share recount info. We have earnings Thursday afternoon after market close, and that's very, very important. You have NSCC 005. We'll see how the reaction is with the markets, and I believe that played into today's action. Obviously, box office numbers, Demon Slayer is just killing it. And I read an article today, they have not even opened. Godzilla has not debuted in China and some other countries, as well as some of these other films. That is extraordinary, that as well as Godzilla vs. Kong has done over $400 million worldwide thus far, and it's not even in the world's largest movie theater market. Amazing. And we could have potential surprise info from the meetings, either the annual shareholder or the earnings call. You never know what may come up, right? So again, earnings Thursday, May 6th, 5 p.m. after hours. I think that's very, very important. The last thing shorts want is uncertainty late in the week. They do not want to face tomorrow with the annual shareholder meeting. They do not know what's going to come of it. There could be some sort of big news, and they do not want to get caught unprepared, which again is why I think today was so volatile, especially early in the week. I believe they are running for the hills personally. So again, earnings estimates, I think it's a huge improvement. As long as we meet or beat or anywhere around the current estimates, I think everything will be just fine. I think we are going to have a run up to in price action to the earnings, and we'll see how Friday plays out beyond that. So let's look at, this is a brief touch on my video from Saturday, just a bigger picture. These are the earnings that from the report in early August. As you can see, traded flat, several red candle days. The orange bar is actually the date of earnings, but you look at what happened from the date of earnings afterwards. We ran up from the, let's just call it $4 range up to the upper 7s. Absolutely amazing. Theaters were closed, everything was closed, and yet the price action still went uphill, right? So let's look at early November. Several red days trending down. Orange bar is the date of earnings. As soon as the earnings come out, what do? We popped, we ran straight uphill from the $2 level up to the $5 level. Absolutely amazing again. Theaters completely closed. Bankruptcy was on the table. Huge, huge, huge difference in price just because of the earnings. Let's look at early March of this year. Looky there, we had 4 red candle days in a row. Leading up to earnings, then we started a little run up to price action. As you recall, it was on Wednesday. So Monday and Tuesday, you started the run up. I do believe because it's Thursday, the shorts were exiting and putting a lot of pressure to get out of their positions, and I'll show you why very shortly. But this is before we ran up to $14.54. But you can clearly see on the chart, post earnings, absolutely bullish. So I took this screenshot from my phone. There's multiple screenshots, but I want you to look at where the yellow, the green arrow is. These are the returned shares and the borrowed shares all at the same time. So I started taking these around, every hour or so from about 11:30 this morning Eastern to the end of the day, and I just want you to see how this progresses. So you started with 3 million returned, 3 million borrowed, right? 1 for 1 nearly. About an hour later, 1 for 1, 3.5, 3.8 borrowed. You go about 2 o'clock, 4.4 million returned, 4 million borrowed, nearly 6 million returned, 6 million borrowed towards the end of the day. Right near closing or right shortly after closing, 6 million returned, 6.1 borrowed, nearly a 1 for 1. So let me try to illustrate what I think is going on. So what you're looking at is the price action in and around the time of the last earnings report on March 10th, 2021. The gray volume bars that you see in the background are the borrowed share volume. So it's obviously very distinct as to the timeline of that orange bar, which is the date of earnings. So let's start on the top left, the little suitcase. So let's assume I've already got 6 million shares, borrowed shares. So leading up to earnings, I take those borrowed shares and I start shorting the price downwards very, very heavily. If you look at the gray bars, they are nearly non-existent because I am shorting down. When I get to a price point that I like, I take those borrowed shares and I return them. And what do? I take those returned shares and I borrow more shares. If you look at the date of earnings, you see the huge volume increase in borrowed shares because what are they expecting? They know it's running up. They know it probably will run up. They borrow the shares waiting for the stock price action to cool off, and they short it right back down, and that's exactly what they did. As you can see, price action goes down right after earnings at the level of $14.50. There's very little borrowed share volume, right? Rinse and repeat. So let's move forward just a bit. So again, I have borrowed shares. I take my 6 million, I short it down, I take those shares and then return them. I borrow 6 million more on the date of earnings or leading up to the date of earnings, and then I short it down again at the appropriate time. So as you can see, you rinse and repeat, and without the threat right now and the volume right now of an escalation in price action or a huge buy-in volume or a lack of a catalyst, they can do this for weeks on end, right? And they have been, because we've been void of a major catalyst. So leading up to this earnings report this week, I believe they are doing the exact same thing. If you look at the trend lines in the background, that is basically the shares on loan and the estimated short interest. You can clearly see at the date of the earnings report, it is trending downwards, the same as some of the indicators right now, and the numbers are trending downwards. That is because they have taken those borrowed shares they have existing, they have shorted the price down, they have returned those shares. Now they are borrowing simultaneously, as I just showed you, additional shares. When they will use them is likely after the price run up around earnings or shortly thereafter, if in fact there is one. And if you look over on the far right, the red arrow, that is today, you can clearly see the indicators are heading in a downward direction, the same as they were prior to the March 10th earnings report. So what I've got here on the top, I've got the short interest data. On top is today's data, and right below it is Friday's data. So you can clearly see, let's just look at a few things. So estimated short interest of free float today, 22.53 versus 23.23, down today. Percent of free float on loan today, 34.79. Friday, 35.87, down. Shares on loan, 145 million today. Friday, 140, almost 150 million, down. Days to cover, 1.3 today. Days to cover, 1.24, because they're carrying more shares, they're carrying more risk. The days to cover and the volume calculation is changing as we move forward. I still believe it's between 3 and 4 days, depending on how you calculate it. Cost to borrow is 13.09 today. Friday it was 13.58. Again, they returned a bunch of shares today, right? They borrowed more, but they certainly returned their shares, which is why I believe that went down a bit. So let's look back at this afternoon's chart again. So they slammed it down at the beginning of the day. They shorted it with their pre-existing borrowed shares. They in turn at that time simultaneously, as you could tell by those other graphics, borrowed more shares. They got the price to around the 970 range, and I believe the algos took over, the computers took over at that point, and I believe it was just a systematic borrow cover over and over. I believe they were systematically covering some of their positions 1 minute at a time, could be 10,000 shares at a time. They short cover, sell cover, however you want to word it. But I do believe that is exactly what happened today. I believe they are heavily trying to get out of their positions in anticipation for the action tomorrow, Wednesday, and Thursday. So again, this is another look at the March earnings. Orange bar, date of earnings. You clearly see where it was shorted down by the red arrow, 4 red candles in a row, then run up to price and earnings. Why? Because you can see the trend and indicators are all heading down, downwards. They are exiting their position leading up to earnings. The borrowed share volume goes way down. Date of earnings, borrowed share volume goes way up, right? Because they're planning to short it down, and they need to exit their positions for shorting in case there's a price run up, right? Because they don't want it to squeeze. So this is a larger view. This is all 4 that we just discussed. You can clearly see the same pattern over and over and over again. What is very distinctive is the amount of borrowed share volume that you can see from the time of the baby squeeze in January till today. It is absolutely extraordinary. We are 3 times from January, 3 times the amount of borrowed shares, shares on loan. All of that is 3 times the amount before the baby squeeze. Absolutely incredible, but you can certainly see how they react before earnings and after earnings. They obviously want to keep the price suppressed because they know this is a very volatile stock and it will squeeze. They're doing everything they can. The other item to note on the very far right, they are running out of ammunition. They do not have near the amount of shares that they can borrow because of the utilization is so high. They have what they have. They cannot borrow any more shares, in my opinion. So again, one more quick look. You've got the red bar, which is the March earnings. You can see the trend lines. The price met those trend lines at 1450. I do believe as those trend lines to the right, leading up to this week's earnings, those trend lines will come down just a little bit, but I do believe our price action either this week or next will meet those trend lines. if in fact we have some positive news come out of any one of these meetings, the earnings come in, great news from the annual shareholder meeting, whatever it is. Again, today's short interest, we basically just went over it. The biggest item on this was there were 7 more institutional owners that bought in today versus Friday. That is huge. They are piling in. The smart money is piling in. They are anticipating a squeeze. And lo and behold, as we just discussed, 1 million short shares available. Hadn't seen that in a few days. Short borrow fee came down about 4% from Friday for Fintel. Take that for what it's worth. Utilization came down just a little bit. Again, they were returning the shares, right? There's a few more shares out there because they returned them. I do believe that it will go back to 100 tomorrow or the next day. So as always, I have skin in the game. I was down. I have been down with you for the last 5 days and more. I am in this diamond hands to the bitter end. So my bold prediction by end of week, based on the price action of the other previous earnings reports, I do believe we will run up by end of week to 12 to 12.50. I haven't a lot of confidence in that. If in fact the earnings at least meet estimates, I do feel very bullish. The options purchases and all of that data looks very, very bullish this week. So I do believe 12 to 12.50 is very, very possible. Closing quote, "There is no such thing as fun for the whole family," by Jerry Seinfeld. And not everybody's having a blast right now, right? Not all the apes, not all the diamond hands, not all the retail investors. There's some anxiety out there. We've had 5 red candles in a row. A lot of anxiety about what to expect this week. Just enjoy the show, enjoy the ride. My personal feeling is, again, just my opinion, not financial advice. We are holding a lottery ticket. We are holding an absolute fantastic opportunity in our diamond hands. Stay positive, keep your head up, and I think the rest of the week is going to be exceptionally bullish. So I hope you enjoyed the video, found it informative and entertaining, and if you did, please like, share, and subscribe, and certainly comment. It is a newer channel, and I would appreciate the support. And as always, thank you for watching, and I hope your life is full of green candles. Take care. I'll talk to you soon.